GDPstrategy.com.
Hi, it's Chris again, looking at the upcoming trading session for Monday, September 1st. The very first thing that I'll have to say about this market is that you need to be aware of the fact the Americans and the Canadians are gone for the day. That means North American trading hours are going to be absolutely dead. Labor Day is a pretty big holiday. Just about everybody will be gone. Obviously, the currency markets and the like will still be open, but there's really going to be almost nothing in liquidity. That being said, let's take a look at the announcements, though, because there are a few out there that we need to pay attention to. There are a lot of things coming out of Indonesia and India right away, which really aren't going to affect the markets. First thing I'm paying attention to is the European numbers coming out of Germany. GDP anticipated to be at negative 0.2% quarter over quarter. That's a pretty sickly number, and right now people are starting to focus on whether or not the ECB will have to do something along the lines of quantitative easing. If this number is worse than anticipated, look out. The euro should fall rather drastically at that point. However, we could get a little bit of a bounce off of a strong number, which just has us selling at higher levels, quite frankly, because the euro's got a lot of problems. That being said, after that, we have German manufacturing PMI a bit later, anticipated to be at 52. Don't expect this to really move the market as much as GDP, but it could have a compounding effect. So, for example, if the GDP number is less than anticipated, and this number is less than anticipated, just adds to the misery of the euro. Ironically, though, a bad number out of these two numbers could possibly push the DAX higher after initial knee-jerk reaction lower, and that's because people may be looking for quantitative easing, which normally means good things for stocks. After that, pretty quiet day with the exception of one particular announcement I'm watching, and that happens to be the British manufacturing PMI. It's expected to come out at 55. Pound dollar will be affected by that. Straighter correlation than we'll see with the DAX. Not as many moving parts there. If it's stronger than anticipated, expect the pound and the FTSE to rise. If it's weaker, then expect them to fall. I don't expect anything drastic one way or the other, but it will more than likely determine the direction of cable for the session. After that, really not much to pay attention to, probably a quiet day all the way through to Asia. But with that being said, let's take a look at some charts. Looking at the euro, you can see it just looks horrible. There's no other way to put it. This chart looks horrible. The euro simply cannot get out of its own way, and as a result, I feel that this market's probably going to continue to break down a bit. We closed at the very lows for the session, and any bad news out of Europe will just simply put more fuel in the fire, so to speak. 130 should be targeted. I will be selling rallies. We get good numbers out of Europe. I don't care until we get above 133. At that point in time, I'm willing to sell. You can see that the DAX had a little bit of a supportive candle for the Friday session, and it should be noted that 9400, which was the side of a gap, did in fact cause a bit of support. So with that, it's very likely that the market's already kind of made up its mind. It wants to go higher. If we get quantitative easing concerns, that's normally good for stock markets. 9600 above, though, will be resisted. Keep that in mind. We got to get above there to be comfortable going up to about 99 or so. You can see that the pound dollar tried to form a little bit of a base over the last several sessions, and I think it's starting to do that. It's starting to do exactly that. So a break at the top of the range, probably after the British announcement of the manufacturing PMI, sends this market looking for probably first 167 and then maybe 168 if we get a little bit of momentum. And finally, looking over the FTSE, you can see that we found support down here right at this support area. We ended up forming a candle that looks rather supportive. It's a hammer after all. Biggest problem I see, though, is there's a lot of resistance above. So this is a grind higher. I would prefer to see short-term pullbacks that offer support maybe on 15-minute charts and just play it through short-term binaries. With that, I've looked at the upcoming Monday, September 1st trading session.